Good morning, everyone. It's Gail with TradersHelpDesk, and I wanted to show you a trade that could potentially be coming in on the Nasdaq. It's about 6:12 in the morning on January 8th, and what is really interesting to me is the fact that we're overextended here, and we're overextended here. We also have a bearish bar forming here and potentially here, but this one just started forming, so you still have to watch it. But this scenario is telling me that more likely than not, this market is going to go down either now or right before the market opening, potentially at the market opening. Now, there's been a lot of volatility in the indices. So how could you potentially trade this? There's really a couple of different ways. I'm liking the Nadex touch brackets. They are now available in the live account. And you can see I already have the touch brackets open. So you have two different choices here. You have a 65.50 and a 65.80. Remember, the number on the right hand side is the ceiling. The number on the left hand side is the floor. So in this case, if you chose to do the 65.50, you're within about 15 points of price. Now your risk would be low, and everybody knows I like low risk. In this case, it would be 51 compared to 549 in potential profit. You could also do the 65.80. That's going to have more risk, but you're still getting a 1 to 2 risk to reward ratio. Now here's your difference. This one has a ceiling price at 65.80. The other one is 65.50. So I'm going to go back and put the lines on the chart for that, and I'll just use this one. So we have the first line is 65.50. So if I put that line on here, there's the line for the 65.50. Now if we go to the 65.80, that would be just about here. It's a little bit short of 80, but I think you can get the point. Now here's where they differ. If price at the open comes up and touches 65.50, if touched, you will be exited from your trade. But it would have to come up to 65.80 on the additional bracket. Now, you have to weigh what you want to risk. If the 65.80 is too much in risk, and again, right now, the risk on that is about $182. If that is too much, there's two ways you could do it. You could just wait and let the market open and then enter one, or you could come down and enter the 65.50. It does have much lower risk on it, but again, if it comes up and touches 65.50 at the opening, then you will be out of that trade, even if later it does move in your direction. If that number is touched, you will be exited from your trade. So just different ways to trade these markets when they're very volatile, and depending on what you want to risk as to which one you would choose. Also, don't forget to subscribe to my channel so you'll be notified when I do go live or when I upload additional videos.